Hi, I'm Daniel Dixon with freeaccountingschool.com. Today we're going to answer the following questions. What are revenue accounts? What are expense accounts? And if you want to record an increase to a particular account, how do I know if I should make a debit or a credit? Okay, let's get started. What are revenue accounts? Well, revenue accounts are a subcategory of accounts under the owner's equity category. Revenue accounts have journal entries that explain why money or assets came into a business. And if you don't know what owner's equity is, check out my last lesson on the three main types of accounting accounts. If you'll remember from that lesson, the three main types of accounting accounts are asset accounts, liability accounts, and owner's equity accounts. And revenue accounts are a subcategory under that owner's equity family of accounts. Okay, so let's do an example of when you would use a revenue account. Let's pretend you're an attorney and you're writing a will for someone and you charge them $600 and they pay in cash. And assume that you take that cash and you put it in your bank, just like like a regular business would do. How would you record that journal entry? Well, first you would go to the cash in bank account and do a debit, which is an entry on the left side, to record an increase of cash of $600 right here. And again, in a real accounting journal or a real accounting notebook, you would write the date next to this entry right over here, and over on the right hand side you'd probably put a little memo showing how the money got in there, or maybe it has a little note on who made the payment, what customer made the payment. Okay, then we're going to go over to an account called sales revenue. Now, what type of account is sales revenue? Well, it's in the revenue family of accounts. That makes sense. And what category of accounts do all revenue accounts fit in that we just learned? Owner's equity, right? So this account is an owner's equity type of account, and here we're showing an increase in revenue. And so we're going to make an entry on the right, or make a credit. So when you want to show an increase in revenue, you make an entry on the right. This makes sense because for owner's equity type of accounts, to show an increase in owner's equity, you do a credit. And when we just earned $600, that is a definite increase to owner's equity, right? I mean, essentially the owners of the business, the owners of the law firm, just got rights to some additional assets, which came in the form of cash, correct? Okay, so next question, what are expense accounts? Well, expense accounts are a subcategory of account under the owner's equity category, and expense accounts have journal entries that explain why money left the company. So remember, it's an explanation of why money left the company. Let's do another example showing how we would use one of these expense type of accounts. Let's say again that you're an attorney and that an electric bill has come for $100 for the law firm, and you want to enter this into your accounting system. And let's say you decide that you aren't going to pay that bill now, but you'll maybe pay it in 2 or 3 weeks. So how would you record that bill? Okay, well, to enter that in the accounting system, you would first go over to the accounts called accounts payable. Okay, and remember that accounts payable, we learned this in a prior lesson, is a liability type of account. And to show an increase in a liability account, you do a credit by entering it on the right side. So we're going to show a credit for $100 right here, showing that we now owe the electric company $100. So we have a $100 debt to the electric company. And remember, again, in a real accounting system, we'd enter the date over here and maybe a little memo showing that who do we owe the $100 to? To the electric company. Okay, so that was the first part of the transaction. The next thing we're going to do is we're going to go over to an account called utilities. This might also have another name. You might call it electricity expense or something like that. So utilities is an expense account, which is a subcategory of what type of account? Owner's equity. utilities is an expense account, which is a subcategory in the owner's equity family of accounts. Okay, so you go to this account and you're going to make a debit for $100. So this is explaining why you now owe somebody. Why do you owe somebody $100? Well, you owe them because of a utility bill that came in, of a utility expense. This is also showing that because you put a debit over here, it's showing that your owner's equity is decreasing. So essentially, the firm is now worth $100 less than it was before. Okay. So a couple weeks later, let's finish the process, and let's say a couple weeks later, you actually write the check to pay the utility bill that is now due. Well, how would you make the journal entry to do that? Well, first you're going to go to your accounts payable account. Or actually, so this is showing you what we did before. What we did before is we made a credit of $100 to accounts payable, and then we did a debit to the utilities account of $100. Then what you're going to do is you're going to go to your cash in bank account, and you're going to make a credit entry of $100 and show that you are writing a check and decreasing the amount of money in your bank by $100. Then you're going to go to the accounts payable account and do a debit entry of $100. When you make a debit entry to the accounts payable liability account, you're showing a decrease in the liability. So again, 2 weeks ago, when you first got that electricity bill, you made this entry right here. You made this entry here and this entry here. And then later, when it came actual time to pay the bill, you made an entry over here and over here. So now, this accounts payable account is showing that you no longer owe $100. You did 2 weeks ago, and now that $100 is paid off. And you're showing that you lost $100 because it ended up going to the electric company. And why did you lose that $100? Well, you can see that you lost the $100 because it was a utility bill or a phone bill. Okay, next question. So if you want to record an increase to a particular account, how do I know if I should make a debit or a credit? I mean, doing all these examples, how come I always know what kind of, if I should make a debit or a credit to these entries? Well, in a prior lesson, I made a big deal of giving you this following warning. I said, warning, debit doesn't always mean increase, and credit doesn't always mean decrease. Only for certain types of accounts is that true. You remember that warning? Okay, so to know whether you should make a debit or a credit to show an increase or a decrease, you need to memorize the debit and credit rules for each type of account. Again, the way to know is to memorize the rules for each type of account. And then whenever you're dealing with different accounts, you just need to know, hey, what category of account is this account in? Then luckily, there aren't that many type of accounts. I mean, we've actually, in a prior lesson, gone over the 3 main types, and then in this lesson, we went over the 2 subcategories of owner's equity accounts. So let's go through all the different rules. For asset accounts, to record an increase, you do a debit. And to record a decrease, you do a credit. You saw examples of that already. For liability accounts, to record an increase in a liability, you do a credit, and to show a decrease, you do a debit. For owner's equity type of accounts, to record an increase to owner's equity, you do a credit, and to show a decrease in owner's equity, you do a debit. So remember, a debit to owner's equity is a downer for the owners. So just like a cool little mnemonic device I made up. Okay, so for revenues, which again is it's a subcategory of owner's equity, to record an increase to revenue, you do a credit, and to record a decrease in revenue, you do a debit. Again, that makes sense because in the owner's equity family of accounts, when you're doing a credit, that's a good thing, right, for the owners. And when you do a debit, that's showing a decrease. in their owner's equity. So same thing holds true for revenue. Also for expenses, which is also a subcategory of owner's equity, the owner's equity accounting accounts category. To record an increase in expenses, you do a debit, and to record a decrease in expenses, you do a credit. So, when expenses are going up, you're doing a debit, and that makes sense because owner's equity is going down as expenses are going up, right? So for a debit for expenses, you do a debit to show an increase in expenses, you do a credit to show a decrease in expenses. Okay, so here is a chart for those of you who like to look at things more visually. And as we continue in future lessons, you will see these rules in action as we practice making journal entries to all these different types of accounts. But eventually, you're just going to have this down pat. You're going to know whatever type of transaction you see, you're going to go, oh, that type of account, that's an owner's equity account, or that's a liability account. And I know if I'm going to show an increase to an asset, I do a debit. If I'm going to show a decrease to a liability, well, I'm going to do a debit as well. So just look at all these rules, memorize them. It won't take you that long. And as you practice, it's really going to become part of your mind, and you'll never forget it going forward. Okay, so that was the video for today. Thanks for joining me. If you like my videos, please give me a thumbs up in YouTube, or leave a comment, or become a subscriber to my YouTube channel. If you want to check out more of my free accounting videos, go to freeaccountingschool.com.